Hello, welcome to another edition of the ESSSuper Monthly Investment Performance Update. My name is Matthew Kempton, Head of Investments. During the past month, share markets around the world rallied and recovered most of the losses suffered from the large sell-off in June. US, European and Japanese share markets all produced positive returns in July, while Chinese share markets continue to come under pressure, returning negative 10% after falling 6% in June. Domestically, the Australian share market performed well, delivering a return of 4%. Australian resource companies lagged the broader index, returning negative 2% for the month. Government bonds also appreciated in value in July after producing negative returns in June. Often thought of as a lower risk or risk-free asset, investors bought back into government bonds as weaker economic data was released over the month. The Australian dollar depreciated over the month, falling from 76 US cents to 73.5 US cents at the end of July. A weaker outlook for the Australian economy continues to place downward pressure on the Australian dollar. Particularly, the Australian share market performed well, delivering a return of 4%. Commodity prices continue to exhibit significant volatility, with fears of a China slowdown weighing heavily on investors. Oil prices fell 20% over the month, and iron ore, one of Australia's largest exports, declined in value by around 6%. Overall, sentiment across markets improved in July as concerns around the Greek debt crisis ceased, with Greek government agreeing to terms with its creditors to restructure the government's debt. This will also see broader reform in the Greek economy, with cuts to public sector jobs and pensions, as well as higher taxes. Surrounding the Chinese share market bubble have been allayed to an extent, with the regulator in China putting controls in place to stem speculative investing. The Chinese share market, though, did see further selling as investors remain concerned about the outlook for the real economy there. Back home, the Reserve Bank of Australia maintained the cash rate at 2% following a board meeting in July and August. The board's view that accommodative monetary policy and a lower Australian dollar is needed to encourage economic growth in Australia remains unchanged. We have seen, though, the regulator increase macroprudential controls, and this is having an impact on bank share prices. ESSSuper Defined Contribution Fund, Accumulation Plan, Beneficiary Account and Income Stream members continues to perform in line with expectation, while the options with a higher exposure to growth assets delivered negative returns in June. These same assets clawed back most of this in July. Our philosophy is to invest with a long-term horizon in mind, and accordingly we look through shorter-term market movements. As we have stated in previous updates, we caution members against switching money in and out of investment options, as market timing can have a significantly adverse impact on investment outcomes. It is important that members remain mindful that their superannuation portfolios have been constructed to achieve retirement outcomes over the long term. We continue to manage the fund's portfolio of investments to deliver optimal outcomes for the members, and look forward to presenting to you all again next month. Thank you.